Hey everyone, and welcome back to another video for today. So it's a bloody Friday. It's been a very hectic week, but then again, it's been a very hectic year in the markets. Lots of volatility. But right now on Friday, we've got some economic data that came out. And guess what? Just like every other month out there, whether it's negative or positive, the numbers are nowhere near what the market experts, I don't know who comes up with the expectations, but they're nowhere near the expectations. And they haven't even been close to the expectations in God knows how long. Of course, we also have revisions for the month of January, for the month of December as well. So the data that comes out on a specific day, take it with a grain of salt, because chances are that a month from now, 2 months from now, the numbers are going to look very, very different in a good or a bad way. It doesn't matter. To me, these things just don't make any sense. How can you be so wrong time and time again? Makes no sense. We're going to talk about also the oil price situation and all of that in this video. Of course, we're going to have a look at a couple of specific stocks as well that are, as always, looking very attractive, and maybe some of them a bit less attractive. And so right now, if we look at the heat map, we see the following thing: red across the board with some names that are green. Very surprising, or maybe not, but Broadcom is still green after an amazing earnings report Wednesday night. Marvell also up significantly. They reported Thursday after the market closes. I believe they were up 17% or so. Costco also reported. They're up 1.6%. And then if you look at the software names, yesterday on Thursday, the software names were already green. And we joked about the rotation back to software has maybe started. Today, some of them are green, some of them are flat, but very few are deep in the red. Very interesting, right? Very, very interesting thing that we're seeing right now. All the rest here, as you can clearly see, deep in the red, especially financials. Why is that? Well, unemployment ticked up a little bit, more job losses, maybe no rate cuts, maybe yes rate cuts. We don't know, because we are in a very, very difficult, I guess, scenario right now. Because oil prices, in my opinion, are an easier fix than job losses. Oil prices can come down quite quickly next week if suddenly something changes with the Iran situation. One headline and the oil prices are going to come down, hypothetically. Job losses, there's no headline that will make up for the job losses. And that's, of course, something you need to know if you're now looking at buying maybe ExxonMobil, Chevron, things like that. Yes, these stocks are up 15, 20, 25% or so, maybe year to date. But maybe you've missed the boat. Maybe not. Just because oil is up today doesn't mean that oil is going to be up 2 months from now, 1 month from now, 3 months from now. It might be, might also not be. Those stocks have, of course, run up in anticipation that, yeah, oil prices are going to go up. Maybe they're going to stay up for a longer as well. Same with defense stocks, although with defense names, these names I think on Monday or so, yes, they jumped. But since then, they've been either flat or back down a little bit. Remember, the market is always forward-looking, and right now it does send you a couple of signals. And so if you enjoy this type of videos, hit all the buttons. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Okay, so first up, we had headline numbers. Non-farm payrolls, negative 92,000. So the economy lost jobs outright in February versus the consensus number expected to add 50 to 59,000. How can you have, again, how can you have such a big difference? It's not like it came in at, oh, it only added 40,000 or it's at zero in an extreme case. No, it's negative 92,000. Consensus was 50 to 59,000 positive, not negative. Crazy. First negative print in a while, which means unemployment rate ticked up 4.4%, up from the 4.3% in January. And remember, in the live stream, I think yesterday or 2 days ago, someone asked about SoFi and the macro environment and all of the headwinds that might come. Okay, but remember, SoFi thinks 5% unemployment in their worst case scenario. We're still far away from that right now. There are 7.6 million unemployed. As for revisions, here as well, big difference. December 2025 revised from up 48,000 to now down 17,000. January 2026 was a big shock in a positive way, revised from up 130,000 to now down 126,000. In this case, the surprise was a good one, but here as well, the difference between the real numbers and the consensus numbers were just very big. And so if we look at the combined revisions, negative 69,000, nice number, I know, which are gone from the prior month. The 2025 annual benchmark revision, total jobs revised down by 898,000. For the full year 2025, job growth slashed from over 584,000 to just 181,000. Again, I do think that wherever this data is coming from, they need a serious upgrade. And so let me actually remove myself right here. Where do these changes come from? Sectors here: healthcare, federal government, information, transportation, social assistance, construction, manufacturing, retail, leisure. This is basically the changes for the month of February and some of the explanation there. For federal government, it's now down 330,000 from October 2024 peak. If you want to take a screenshot, go ahead. Moving on to the rest of the information. Wages are actually up 0.4% month over month to 37,000.32 cents an hour. That's up 3.8% year over year, which is better than inflation. Production and non-supervisory up 9 cents or 0.3% to $32.03. As for the household survey details, labor force participation 62%, that remains unchanged. What also remains unchanged is the employment population ratio at 59.3%. Long-term employment sits at 1.9 million, 25.3% of all unemployed. That's up from 1.5 million a year ago, 27% increase in people who can't find work for over 27 weeks. Why 27 weeks? It's more than half a year. Part-time for economic reasons dropped 477,000 to 4.4 million. That's the one positive data point here. And the work week unchanged at 34.3 hours. So that's every data point that we got on Friday that you need to know about that might explain the reaction from the market. Now, what about the probability of a rate cut over the next coming meetings? Well, the next FOMC meeting is in 12 days and 2 hours, 24 minutes from where I'm filming this video. So it's March 18. What do we see here? Seems like there is no cut that's going to happen, which is not a surprise, but it did jump. The probability did jump a little bit to now 4.3%, up from 3.7% a day ago, but down from 7.4% a week ago. Okay, what about April? In April, that is now at 21.4%, a big jump from the 11.4% a day ago, and a bit lower than a week ago, which was 23.3%. Okay, let's move even further. In June, by June, we do have a new Fed chair. If we look at June, here as well, as of right now, 49.7% chance that we are still in the same range that we're in right now. To have a rate cut, 41.7% chance, that is higher than the 30.2% chance that we've had yesterday, but still a bit lower than a week ago and definitely lower from a month ago, which was 51.1%. We go even further in July. Maybe by July, we might already have a cut. Seems like July meeting is the meeting where right now the probabilities are that, yes, we are going to have a cut by July. So still a long way to go. Of course, until July, a lot of things can change. We have a couple of meetings until then. And yes, if it seems like, look, oil prices have come back down, the only problem is going to be the labor market. Yes, then cuts are going to happen. Speaking of oil prices, if we look at the WTI crude price, it's at $88.84, up 9.6% only today. As you can see, year to date, we were actually under $60 at the start of the year. We were below $70 at the end of February as well. So yes, it did start to rise quite aggressively when the conflict with Iran has started. Now with this, the question is, yes, can it go higher? But I think the bigger question is going to be how high and how long is this going to last? Because let's say it does go to $90, but a week from now, 10 days from now, 2 weeks from now, it's back to 70, then I don't think it will impact the world economy, the US economy that much. If it does stay for a long period of time at these types of levels, that's when you're going to see way more negative impact, maybe towards the back half of the year, because the prices, the impact of those prices, it does take time. Now, what doesn't take that much time is to see the price change at the pump. Now, we know something has changed in Venezuela at the start of the year that could help it a little bit. The US is still producing quite a lot. And then we've had this tweet from Scott Bessent. So President Trump's energy agenda has resulted in oil and gas production reaching the highest levels ever recorded. To enable oil to keep flowing into the global market, the Treasury Department is issuing a temporary 30-day waiver to allow Indian refiners to purchase Russian oil. This deliberately short-term measure will not provide significant financial benefit to the Russian government, as it only authorizes transactions involving oil already stranded at sea. India is an essential partner of the United States, and we fully anticipate that New Delhi will ramp up purchases of US oil. This stopgap measure will alleviate pressure caused by Iran's attempt to take global energy hostage, because as you know, the Strait of Hormuz is a very, very strange situation. If we go and have a look at the map, this is basically it. Ships have to go in and out of this place right here. I don't know why throughout many, many years they here, UAE, Oman, whatever, why didn't they think about, I know it's very simple to say this, but the Panama Canal is very, very important. Why couldn't this be right here? This is a line that I drew. This doesn't exist. The UAE-Oman Canal. Instead of always making your way through this strait right here, why not build a canal and you're not losing that much time, plus you don't have to go into these areas anymore. This is a project I think is worth funding. They have been building islands out of nothing. Why not build a canal that actually benefits the world economy? Because in the meantime, because of this situation, well, tanker rates have hit all-time records. The global very large crude carrier, the average price is the highest since 2008. This is the last price that I found, $280,941. But I'll talk about this maybe in another specific video, because some of these companies own quite a lot of ships. If the price of those ships go higher, if the rates stay higher for longer, well, you can guess that these types of companies are going to be making a hell of a lot of money, especially in the short term. When you look at the situation right here, a lot of these companies have suspended operations in those areas. And so not that surprised that prices have gone up. Yes, a lot of these stocks have also gone up already quite a lot. And the surprising stuff is that it has started to go up already at the start of the year. And for those that are unaware, roughly 20% of global oil and gas typically passes through the narrow strait that we have seen before, which again, to me, is very, very strange why no canal has ever been built here to, well, save time, save money, and not be in the situation that we're in right now. Now, if we have a look here at a couple of the companies that I've just talked about, DHT Holdings, Frontline, I think the other one is Stingray here. Look at the year-to-date performance. 67%, 57%, 57.7%. That's quite a lot. And you can clearly see that it has gone up before this whole situation has started. Before this whole situation has started, these names were already up 40%, 50% or so. I guess someone always knows something before everyone else. Now, if we go and look at the 5-year performance, well, we can see that a lot of these names are now at the highs not seen since June 2024. And of course, since it peaked back then until the Liberation Week of 2025, a lot of these stocks have crashed here, 57%, 46%, and one here, the DHT holdings have come down by 15%. And since the lows of April, it did go up a little bit, but the majority of the gains you can clearly see have started at the end of 25, start of 2026. So if you were thinking about, oh, this is an easy way to make money, well, the market is already ahead of you because, well, you can clearly see that a lot of people have been buying these names 2 months ago. And so all of that leads us to this picture right here, a lot of red on Friday. We've seen a lot of red also throughout the week, but also some green. And then year to date, if you want to look at the year to date performance, you know where the green is, you know where the red is. We've already talked about it time and time again. Well, you know what they say, never let a good crisis go to waste. So let's actually have a look at a couple of specific names. I'll start off here with a name that I own, one that will report earnings next week, and that's Rubrik. Rubrik, just like some of the other software names, cybersecurity names, has seen the stock rebound from the lows of Tuesday, February 24th. Since then, stock is up quite nicely, but as I said, next week is the earnings report. We know from preliminary numbers already that it's going to be a very good quarter. But what about a guidance? Based on what we've seen with Palo Alto, based on what we've heard from CrowdStrike, seems like guidance is going to be a good one. And guess what? This whole situation right now, well, it's quite bullish for cybersecurity names. Now, who's green on Friday other than Rubrik? We have Marvell, that's up almost 20% on the day. Marvell just follows the nice reaction that we've seen with Broadcom, which was interesting because Broadcom, of course, we've had a big jump from the stock, but Marvell did not actually follow Broadcom on Thursday. We only seen a reaction after Marvell itself reported its quarterly figures. Good report, good guidance as well. A lot of strength there, just like what we've seen with Broadcom. Who else is green today? Rocket Lab is green. We have ServiceNow, that's green. CoreWeave is actually also green. Very, very surprising to see CoreWeave green today. Palantir is green and has seen a nice rebound as well over the past couple of days. Not surprised either. Then some other surprising names. Root finally catching a bit. Alibaba up 1.1%. Alibaba will also report their quarterly figures. Seems like next Friday, although don't know if that's officially confirmed or not, but Alibaba, the stock, has also come down around 20% or so over the past month. That has flown under the radar. AST, yes, yesterday took a hit, but today it's one of those names that is up 1.3%. Salesforce is up, so it does seem like some software names are maybe finally catching a bit, but you know the meme, right, where a stock goes down quite a lot and then it rebounds a tiny bit and you see the guy popping champagne. Now this is exactly what we're actually seeing right here. Yes, it's a nice rebound, but look how far this stock has fallen. As for the rest, if we look at the neoclouds, the only name that's green is CoreWeave. And again, for some strange reason, we have, again, the same discussions going on. Oh, Iron is better than Nebius. Nebius is better than Iron. Guys, own whatever you want to own. I feel Nebius is the best of the bunch. That's why I own more Nebius than Iron and CoreWeave. If you feel that Iron is the better one, okay, then just go with Iron. Stop talking about the other companies. It just shows that you might not know what you own. As for financial names, you can see FinTech. The only one that's green here is a buy now, pay later player, which is quite strange because it's only Klarna, not really a firm or any of the other names out there. Okay, Pagaya is down 4.4%. I guess having put conservative guidance already because of the situation that they saw is not good enough, right? Because that's the reason why the stock dropped quite a lot. Now the stock keeps dropping because the situation might actually be what they said it's going to be. Market might act irrational in the short run. Do think there might be some opportunities in this market. dLocal also yet to report their quarterly figures. We still have 10 days or so. I still feel like this one is a very undervalued name. Completely filled that gap here from 2 earnings reports ago. As for the big tech names, we have Netflix that's a bit overbought right now, but we know why. The reaction of what happens when you do not spend an insane amount of money on an acquisition, but you start buying back your own share. And I do believe that they've acquired a Ben Affleck AI content making company or something like that. Interpositive, an AI filmmaking startup founded by Ben Affleck. I guess they have the money to do that right now. That's still up quite nicely over the last couple of weeks. As for the rest here, we did see that most of these names have rebounded a little bit. Google has been in this range for a while, $300. I did a specific Google video, I think on Thursday. Meta still around $650. Microsoft, yes, has seen a small rebound just like every other software company out there, $412. You can see that the market right now still has no clue where it wants to go. With crypto, yes, Bitcoin has seen $73,000, $74,000, but then back under 70,000 right now. Market is still not sure what direction it wants to go, which is why we are seeing the S&P being, well, at the same place it was, where was it? At the end of October. Yes, we've had that huge overreaction, of course, Liberation Day, April, then a nice V-shaped type of recovery, right? We can see the top, the previous top was February 18. We reached that top yet again, June 23. So a couple of months later, we're at the same levels as before the market started to go down heavily. And then the market just continued to go up and up and up. Right now, who knows? Can we continue to go down? Seems like the lowest point we've been was here at 6,539 or so. We're now at 6,768. Could we go down a little bit further? What type of decline is this? Of around 3.7%. To conclude, and it's every time going to be the same conclusion, is if you don't know what to do nothing. We've seen these types of situation before. We're going to see it again. If all of these headlines are freaking you out, close your laptop, close your PC, your phone, whatever. Don't look at your brokerage account right now. If you are comfortable with what you own, then yeah, maybe you might see some nice discounts, although I don't think discounts are that crazy today. Basically the same prices of what, a couple of days ago, maybe a week or so ago. So yes, a lot of headlines out there, a lot of headlines that are meant to make you click on it, freak out, etc., etc. And if the title of this video is one of those things, well, I'm trying different titles. So if you clicked on one, then I guess YouTube knows who what you like, but I do apologize for that. But that's the YouTube game. Anyways, keep calm, invest in what you know, what you understand. Don't freak out. And if you don't want to do anything, don't do anything. Have a great weekend, everyone. See you all in the next one. Bye-bye.